Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the euro a bit stronger here. Obviously, correspondingly, the dollar weaker. Pretty much, basically, it's all on the trade talk, or the thought being that these trade talks are going a lot better, and there's going to be a little bit less demand for dollars. It's another story that was referenced also with the gold market. We're also seeing the cable push a little bit higher here, also. So we're going in. Take a look at right across the board, but we are also seeing the Canadian dollar pretty much at its highs here. Obviously, inversely, the dollar CAD at its lows here. And we'll also take a look here with the gold market. Everything appears to be benefiting from the thought of the trade talks going a little bit better. Also, the concern for a little bit weaker dollar. And look at this crude oil. It continues to go on a push higher. Obviously, keeping the trade talks helping that too, but we even had a pretty good run up here in the crude oil, which continues to move hard. Got past some key resistance and continues to motor higher. We'll have an outlook for that also. We'll get into the analysis in just a short bit. We're just going to maybe a little bit slow today. We have President's Day, but we're going to go on just quickly, just touch on some news. It's not that much going over the week. That'll be relatively quick. So on the morning bid, and what will be a setback for the Brexiter version of the free trade global, Britain, China, and Japan are both reportedly to be irked by British diplomacy or the lack of it. China is said to have canceled a round of trade talks after Defense Secretary Gavin Williamson threatened last week to deploy a warship in the Pacific. Now, we saw those reports in regards to Britain as far as looking to have a more established stance in world geopolitics, but or in geopolitics. But anyway, it states here that in the FT now reports Tokyo has bristled at the clumsy UK attempts to chivvy along talks in a deal similar to the EU-Japan once concluded. The government is playing down both reports, but Williamson's gun-ho speech in particular is likely to face criticism in Parliament debate on defense matters today. In the meantime, news is emerging this morning of a separate spat in which Gibraltar is accusing a Spanish warship of trying to order commercial vessels out of their anchorages in British territory. Details remain patchy at present. In the bizarre twist on democracy, members of the Italian Five-Star Party get to vote today on whether Deputy Prime Minister Matteo Salvini should be prosecuted for kidnapping. Prosecutors in Sicily want to pursue an investigation for alleged abuse of power and kidnapping that began when Salvini ordered some 150 migrants to be held on board an Italian Coast Guard ship for 5 days in August. The fate of that investigation will be decided by a committee of the Italian Senate. It says vote from 9 to 800 GMT. European Union relations with Russia will be on the agenda for a meeting today. In the markets, the U.S. out for President's Day and no notable data. It should shape up to be a relatively quiet session. Markets have taken heart from signs that Sino-U.S. trade talks are proceeding well. That's pushed the world stocks to a 2-month high this morning as China's central television reported consensus in principle on key topics, while a White House statement said the discussion led to progress between the two parties. Asian shares are up 9/10. Nike climbed its highest. The Nikkei climbed its highest for the year, and Chinese mainland shares jumped 2%. The Dow and Nasdaq closed Friday within their 8th consecutive weekly gain, but it's not all cheer. First of all, President Trump has declared an emergency to get the funding for the wall. That's still subject to legal challenges. Also, the trade war may just be moving to a new front. But Commerce Department is set to report on whether the European and auto tariffs that threaten U.S. national security to Trump, who may disclose the contents once the China talks are passed. Data from Asia this morning reinforces the world economy is slowing. Weak Singapore exports and data dropped in foreign orders. And moving on, the dollar has slipped and risk appetite improved, and also due to Daly's comments affording some relief to other currencies. The euro was trading just above 3-month lows to the dollar, and most emerging market currencies are enjoying some relief. While with President's Day, the taking Wall Street out of the picture, trade in Europe is likely to be more muted on Monday, although the deluge of company results continued. Let's go on. Let's move on. And on to the Aussie. Aussie dollar and New Zealand dollars fly to 1.5 weeks highs on risk rally. The Australian New Zealand dollar soared to 1.5 week peaks on Monday after strong gains last week on hopes of some resolution. The New Zealand is fared better after its jump of 1.7% this week. Expectations the United States and China would come to an agreement to resolve their year-long trade dispute boosted risk sentiment. Data last week showed China's banks most made new loans on record in January as policymakers tried to jumpstart the sluggish investment. We've talked about that over the past few weeks. Is that it seems like at one point it seemed like we were getting a daily stimulus almost daily. Three Fed policymakers last week predicted just one or no rate hikes this year after disappointing U.S. retail sales and industrial production data. And that probably will weigh some on the dollar. There's a greater significance attached to these numbers this week, given the data dependency of the RBA policy outlook, and that's the employment report on Thursday. The Reserve Bank of Australia caught investors off guard this month as it shifted away from its previous tightening bias to put rate cuts back on the table, saying a sustained increase in unemployment could trigger an easing. Stands to reason that the market will be more sensitive to labor market reports, though the opening months of 2019, than it has been for some time. And quickly going, the euro lifted from lows on trade talk optimism. The euro clawed back itself over 113 mark with riskier currencies. The euro has been stuck in a tight trading range since November as broadening weakness in the Eurozone economy has offset a sharp dialing back in expectations for interest rates in raises by the United States. But after hitting a 3-month low on Friday, the euro has bounced back sharply, helped by the positive mood around the risk assets. Investors hope for an end to U.S.-China trade conflict. If anything would be running with it, you have a background of quite a decent growth and a Fed that is putting its rates on hold. However, he said a way to play the Fed pause play was in the dollar yen, which sees rising to 120 per yen by the end of 2019. Whoa. The euro ticked up to 113.03, while the dollar index, which measures a greenback against a basket of rivals, slipped 0.1%. Despite Monday's cautious gains, traders are betting on a weaker euro in the coming months as they expect the ECB to keep its monetary policy accommodative due to the low growth in common currencies. There would be very little to report in the euro positive side of the conflict were to escalate. The smallest economic disruptions would no doubt be damaging for the euro in light of the fragile state of the Eurozone economy. And also, let's just quickly touch on the gold. No real news here, the gold, other than it moved higher, but it's saying the same thing. An alleviation of risks around trade talk has certainly benefited the markets, adding that the signs of progress in discussions has reduced appetite for the dollar, which has been supporting gold. One last thing I did want to go and touch on, and Steve's mentioned this several times, is about the bond market. And since the debt has been declined so much, and I just want to note here, it says foreign selling of U.S. Treasuries in December hits a record high. Eventually, this may start to push then where what will end up happening with the dollar. Like I said, we haven't been able to get anywhere. We've gotten to a point where, we're stuck in these tighter ranges, but with a little bit of a dollar bid. Well, you saw these retail sales data just be absolutely abysmal, and certainly the dollar came off with that. And you're seeing the Fed saying, okay, we're starting to pause. Now, if you see this start to, gain further traction, we could really maybe eventually see the dollar pull back further. But it says foreign investors sold a record amount of U.S. Treasury bonds and notes the month of December. According to the Treasury data released on Friday, foreigners sold $77.35 billion in treasuries in the month after net sales of 13.2 in November. Look at that, 13.2. Holy smokes. I mean, that's quite the gain if you look at about it, 5 to easily, actually almost 6 times, actually more than 6 times as much if you think about it. I think in December there was a lot of talk the Fed would still raise interest rates this year, said Kim Rupert. The Fed on December 19th raised rates as expected, but signaled a few hikes this year. Rupert said the Fed didn't really change its tune until mid to late December. Analysts said the declines in yields in December could be attributed to the decrease in Treasury holdings by foreign investors. At face value, one could suspect that a lot of the pain in China was sort of lessening, said Acton Economics report. China's holdings of treasuries, meanwhile, also grew to 1.04 trillion in December. The report also showed foreigners in December sold 48.3 billion in net long-term U.S. securities after buying for 5 straight months. So let's go on and move in here to the analysis. Take a look where we start and move on from there. So it says the euro came back on Friday after stops were tripped sub 1250. Downside target has been 1219. Short-term support 1234 discussed Friday on the European crossover webinar held. The market spent the rest of the day testing the resolve of the late shorts. One area note that has been referenced the last 2 months on the webinar is the spread in EMAs between the 9 and the 27. The last time we saw this disparity was when the euro reversed from its run to 1569. Euro dollar has posted a hammer. Resistance is 13.29 with support at 12.53. So let's take a look where we stand here with the euro. And you can see how we came back rather strongly here with the euro after coming down here and right into this. We talked about the 1234, which is, we were looking for 1219. That was our bias chart, but we said, hey, there's going to be some support right there. 1234. We've been eking down. And we certainly came back with a strong resolve, actually to the point that you see a hammer bottom. But one of the things I referenced in here in the analysis, we'll go back to that. One area of note that has been referenced the last 2 days on the webinar is the spread between the EMAs 9 and 27. And we'd referenced that, and going back to that, here's that spread here. Look how wide the spread between the EMAs got, okay? And that was just right after we hit this top, and then from there, we saw quite the reversal. Well, I'm not saying we're going to see quite the reversal necessarily playing itself out again, but you can see the spread was just about the same width here as the last time we saw the market at the very least come back in or a regression to the mean. So if you look back here, look how far the spread's gotten. We've gotten a bit overdone. And although the euro was on quite the slide, we saw the euro come back on this day and then turn around, reverse back, try and come back again, and then finally we test these lows. And with this market trying to figure out what it wanted to do, we really made this push lower, and you would have thought that once we went sub 1250, and on a Friday too, you would think that we would have pushed even lower. But the market came back, not real fast, but started kind of clawing itself back. And as if we move over here to the 30-minute, you can see here, little by little, we just started pushing up. Got a little bit oversold, came back, and then we just started pushing up further in the day. Okay, it looked like, okay, well, they tested it. We came back right in here. You can see it wasn't initially at first huge, and then we came back in. Okay, they're just testing the lows here. The people that got stopped in, they're pushing them out. And you came back in like, okay, well, now it's starting to settle. And then we spent the rest of the day just pushing higher, triggering some stops to the point we had even mentioned this on the webinar that day. Remember, or in the chat room, I said 1302 would be the uncle point. Or actually, I think I did mention also in the webinar, but I know we mentioned there in the chat room. We came off a little bit, but not a huge lot. And of course, we reasserted ourselves. And looking back here on the daily, you can see how we have this nice hammer bottom here. So really anybody's been pushed to probably push them a little bit further. But this spread here, the same disparity we saw here, you look for, like I said, maybe closer, if you don't know if we call it a reversion to the mean, but for this to tighten up a bit. And so maybe we'll make a run up here into the 1340s, 1350s, but we'll get to that in just a bit. So we pointed out resistance was going to be 1329. Okay. Well, we just about came up close to 1329. We came all the way up here to 1326. So 3 pips off of this 1329. We'll move this over a little bit. There we go. The market may stay a little bit quiet with President's Day, but really any headlines that we're getting out of that are going to be recognized as positive coming out of China are certainly going to work to go on and push this a little bit higher. So when we come in here, we'll give it just a little bit more room, thinking that it might want to trip these stops here. So resistance today is going to be at 1330. We'll call it, all right. We'll call it 1336. We're going to allow for that to maybe take this top out a little bit if we want to push it a little bit here. Now, when you look on here, in the exponential moving average, we'd already generated on this pullback that buy signal. We've stayed on the buy signal here, but we'll go with 1336 for our bias chart resistance for today. You can see the 1286. Let's go and take a look on a 2-hour chart. It's going to be right here at 1280. 1280 will be support for today. And I would be looking for this euro once again in light of this, just from a technical standpoint, that we got so far overdone with the EMAs on the daily. Once again, we had referenced this at least a couple of times last week as we got towards Friday. And even as we widened here, we said, well, it's not as wide as this, but it's getting pretty close. And we certainly did here on Friday. So I think that even though the market is still susceptible, if we were to get some bad news, is it susceptible to coming back down to 1219, at least in the short haul. Once again, I'd be very careful trying to sell this, because I think anyone that got stopped in here, they may have thought, well, I'm going to ride it out. Those with a little bit longer term outlook may start to have their uncle point come in around the 1340s or almost 1350s. So once again, I'd be playing it really on the long side on the dips, and especially if we get the good China news, China trade talk news, we could certainly go in and really push this up rather quickly. We may eventually come back in, but it will help offset some of this disparity we have in the EMAs. Let's go and move into the cable. So it says cable rebounded from 2787 level, confluencing with 2796, which is the 50% of this range of 2374 to 3216. The market has closed lower 8 out of the last of 11 days. So a bounce is plausible, kind of the same play we would think about with the euro, but for different reasons. Initial daily resistance comes in at 2889, confluence with the downtrend at the same price, followed by 2953. Support is 2787 with solid buying coming in at 2716. So let's take a look here on the cable. So we're talking about right here, this 2889. And that actually happened to be confluence here with this, also this down trend line. But we're looking for potentially a move back up. And saw it, like I said, when you look at it, it's just been down, down, down. And we're actually looking on the 2 hour. But if you look here on the daily, this has just been down, 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 down. No, basically no let up here. We're just barely starting to push up a little bit higher up in here, right here. And so once again, same thing. If we see the dollar start to come off, it's going to be open to go and push higher. So we set our resistance, and you saw that on the 2 hour at 28.89. And then we're coming in here with this trend line here. But our resistance today is going to be 29.53. 29.53. And let's take a look at it here on the 2 hour. Support's going to come in right there at 28.68. We're going to keep it relatively tight. So it'll be 28.68 for support. So it says the Aussie has defended the 38% back of the flash crash lows. U.S.-China talks have placed a supporting bid. Initial daily resistance is 71.79, followed by 72.33. Well, one of the things that we've talked about this, and Blake had mentioned, is that on any kind of good news, you're probably going to see a spike in this Aussie. And then from there, he was noted about being a seller. We referenced this just a little while ago in regards to the RBA stance now. Their focus now is on employment, and they've shifted their bias, so to speak, to being open for a rate cut if unemployment remains sluggish. So we have our resistance at 71.79. Remember, we were talking about 72 being an area where they first start to look at. Well, if we do get that good news, the market's going to be very excited. And 72 cents would come in line. So we have our resistance here. $71.79 followed by $72.33. And there's $71.79 coming across right here. That's going to be our initial resistance. The news may still be a little bit a ways. It might be a few days, maybe towards the end of the week. I'm not sure. But for right now, we'll stick with this 71.79. Obviously, 72.33, that'll be challenged. Once we get some good news, this will probably just be a minor stopping point as they try and push beyond that. And probably the real resistance may not come into about 72.70. But obviously, any kind of good news is really going to, you don't want to get in the way of this initially, essentially. But we'll go with the 71.79. Let's take a look at it on the 2 hour. And we've just shifted into, you're getting some nice momentum here. Look at this, the way this Aussie's made a pretty good run here. A dip, well, I mean, unless the China news comes out, with some, worrisome headlines. It certainly looks like everything, even China media is talking about, constructive talks as far as they've met some key principles. So certainly anything that we wouldn't expect to be backtracked. But if we were to go in and get a bit of a pullback here, that support's going to come in right there at 71.18. 71.18. Not very far, but like I said, we're not expecting anything to come out negative at this point. Well, after having a pretty good extended run here, the dollar Swiss looks like to finally, along with other dollar pairs, starting to ease back a bit. And you can see here we had this engulfing day. Obviously, that was that big day Thursday when things really got with the retail sales, really got turned around. And you can see we made one more stab up here, only to actually finish the day with a gravestone doji right here. So certainly this market acts like it's susceptible for a pullback. And let's go on and put the fib on here. If we're going to see this continued dollar pullback, I think this is one market that probably be susceptible here when you look at this bearish engulfing line actually grabbing all the way into the 50%, more than 50% area here with this bar. And then once again, we make one more run, doesn't even take out the highs, and then we finish with the gravestone doji. So certainly open. If we're looking for a pullback, I would think initially be looking for a 38%. And that makes sense. I like this area here. If we could potentially pull back, it would be 99.42. Well, actually, right there, 99.41. 99.41. Initial support is going to come in, especially when we get this quick little dip here, is going to come in at 99.78. Seems like a pretty good little drop here, but if once again the dollar pairs back, we'll see that initially. But I think we want to be more interested in targeting down here at 99.53. But we're going to be looking for them to take out the lows here, be 99.78. Just for starters, I would think, if we get that pullback. And the way this thing is breaking down, pretty good move up in here, and then we saw this fall, and then just bits and pieces. You can see here, it's not much, but you were saying lower. You would look at it, if you looked at it initially, a little bit lower highs. This one feels like it just wants to break, and once again, that takes us down here. Look at 99.87 resistance. Well, it's going to be right here. Then I'm even questioning whether we could even make it up there, but that's par 6, and I'd really question that. I would go right here with right there, par 53 for resistance. That comes right across here, par 53. Now let's take a look at the dollar peso. And I've just been following this on the, let's move this out of here. Well, we were looking this. I posted this here. I guess I still even had the arrows because although I put it on the bias chart, I didn't do the analysis over the weekend. I wanted to save it until we came in. But we talked about this range. I had this level here marked off as 1945.70, confluence with 1946. We were looking for a short-term high there, and short-term high is just exactly what we got here as this market has dipped. And now we've pushed even lower here. We did see a nice rebound. We mentioned this area here on Friday. I thought, hey, if it breaks down, this will be some additional support, but we could start to move lower. We saw a heck of a rebound off of that. Boy, this gave everybody a chance to get the heck out of Dodge on this rally. But since then we've fallen back. Well, this has a lot to do with what's happening with the dollar per se. Let's get rid of these two arrows. Boy, that's an ugly close. Look at that. That does not look good at all whatsoever. So let's take a look at where we stand here on a pullback. This 61%, I like this here. Look at that. Coming across all these touches of volume right there. So in time, it's not necessarily happening right now. In time, I like this 1911. Because we'll probably have some shorter support before then. Now, short-term support before we get to that 1911. We'll go with the 1916. 1916. But be careful, as right now the dollar's really, slipping here. Obviously, if we get some additional good news, we could even slide further. But we'll go with 1916 for starters. Yeah, 1916. And for resistance, see if they can trip these stuff. It's got a little bit of a support zone here on a short-term basis. It's going to be 1926. 1926. And let's go on and move into crude. You can see here, Euro's trying to push up a little bit higher again. Okay, it says crude is closed above the weekly resistance of 55.25 with an immediate target of 57.18. Support comes in at 54.71, followed by secondary at 54.01. So when we look on here, surprising strong close to the week. I mean, I was thinking we'd probably ease back a bit, but look at this. We took out right in here, right there with crude. So we're saying the immediate target is 57.18. Move back into the daily. Right here. There's a little bit of resistance here. You see it right here at 56.05. Actually, just nipped it a bit, got above it. So just a little bit of short term at 56.05, but the next target is 57.18. We've already had a pretty solid run here in crude oil. This is going to be where they want to get to, but look at this 56.05. You see here, close, open, low. And we've already had a pretty good solid little run here. At least on a short-term basis, we're going to go with this 56.05. They've already gotten just a hair above it. They're just easing back. So we're just going to go with this 56.05. I think we've got a little bit above, although I think that 57.18 is still going to be open. That's going to be the target, but on a short-term basis, they may just trip this 56 and just ease back just a bit. And here's our support here, 54.71. Well, that's our initial support with 54.01. If we were to go on and ease back, let's take a look here. we're going to put the support right there. Right there. 54.39. 54.39. Initial support. And you can see here, we got above that 56.05. We got up as high as 56.24. We could take a little bit of a pause there. So we'll go with, once again, 55.39. And moving on to dollar yen. Dollar yen is taking a pause from 111 after the poor showing in U.S. retail sales support level 1034 was defended. Remember, we had that as our support. It was on Thursday. I think it was Thursday, and the market held there. I was actually looking. I was hoping to get long at 1024, I think it was, and I think the low was only 1026. But 1034 was a daily support level. We had that noted before, but was defended, but rallies to 1079 will find sellers. Market required two consecutive 2-hour closes above 1106 for upside direction to re-engage. Support comes in at 1002. So let's go and move in here. Here's that 1034 we were talking about. It defended it, but as I mentioned here, looking and support then we're looking for would come in at 1002. We're going to move into the 2-hour for a little bit closer look. So as we said here, but rallies to 1079 will find sellers. So up in here to 1079, let's go and take a look where we look on a fib. Although I'm not thinking that that's going to make that much of a difference because we've been trading in such a tight range. Well, 1080 would be the 61%. There you go. So we'll just call it 10. We'll still stick with the 1079, which we had there. 1080 is a 61%. So we already have 1079 marked off. I think we had that from Friday. Support now. We said, well, here's that 1002 we're looking at. If we do take this dip here on a very, very short-term basis, it's going to be, it's 1025 for right now. That may just cause a pause. Actually, I was trying to get long on Thursday at 1024. The lowest 1026. I think 1026 and a half or something like that. It'd be 1025. A little bit longer term basis. Yeah, there it is. Would be 1002. Well, 1002 is what we would actually be looking for if the market breaks down from here. But we're looking for sellers to come in at 1079. Well, as we get good news here on the, if we do, certainly looks like we're heading that way in the trade talks, be careful not to get in the way of this market. And with that, we have to give a little bit wider area to work with. We're going to give it some extra room in here. Actually, it's going to be 79.62. 79.62. And I think if we do get that, you could end up really squeezing this a little bit here. And that won't even be that far for this market to come right up. So we're going to actually give it a little bit of leeway, 79.62 on the upside. Support's pretty clear. It's going to be 78.36. And once again, I think we have to give it, we're going to have a wider area here to work with. And you want to get caught too close and just get stopped out. So it's going to be 78.36 clear right there coming across. So moving on to the cash dollar index. So it looks a bit woeful here. The dollar index is tested and closed below the daily level of 97.19. Exponential moving averages spread suggest overbought market could take a respite. Support level is 96.72 with secondary support at 96.30. Well, when we look on here, we're basically right there. We just triggered 96.72. So at least, and we're saying the next area is right here. You see it right there, 96.30. So we'll stick with right now what we have, which is 96.72. That was a key level on the way up. And here's that 97.19. We got above it. We challenged it, but we couldn't do anything with it. So it's going to be 96.72 for our support. Obviously, we may get a little bit lower if the euro tries to push up towards that 13.36, but we'll stay with this for right now. From a technical standpoint, and let's move into the 2 hour. A bit fragmented here. Resistance is going to come in right there. You see that? 96.97. Not even that far away, but 96.97 will be the resistance. We could stretch it just a hair bit actually right there. We'll call it 97.02. 97.02 coming in. Hmm. There you go, 97.02. And let's go move into the gold market. Gold, the XAU closed strong. The market has positively diverged during the dollar buy, and market appears poised for an upside challenge of 1358 with support at 1304, followed by 1293. Well, certainly the what appears to be positive China U.S. talks has certainly helped to push gold, and positively diverge higher has certainly been the case, because while the dollars continue to move higher and higher and higher throughout the last several weeks, gold has held its own and not even pulling back. I mean, we thought, okay, we might even make it down to 1267, but there'll be a lot of buying even if they push a little bit lower. Heck no, they didn't even get down there, and they pushed and challenged at 1304 again, pushing to an area that we were looking at, which was 1323, which confluenced with the 78%. Well, look at this. This is a 78%, which we didn't even pare back even much here. And look, barely a pullback to 1304, which was our support level at the time. So we did pare back here. This market's really open to challenge here, I believe, here at 1358, if we do get this dollar pullback. So that's going to be our resistance. Now, I'm not going to list that as our resistance for today. Our resistance is going to be which ones we had before when we were coming up here, which is 1334. That's going to be our bias chart resistance, but we're certainly pinning our looks at 1358. Support right now is going to be right there. 13, it's actually 14. We just pick it just right there. 1314 is going to be support coming right across. Well, the bonds are still staying very, very strong, and this works basically like a ball and chain here on the euro. So the euro, once again, if the euro, let's say we get that good positive China news and we see the euro bounce up, let's say towards 1350, 1355, 1360-ish, keep in mind where this bund is, and that'll keep things from getting a little bit too carried away, potentially. So resistance there on the bund, we're already at 66.37. Resistance comes in right there. 66.48 here on the bunds. But certainly we can move higher, but initially that's what we're looking at, 66.48. Support on a short-term basis can be right there, 66.18. Now let's move into the DAX. Good strong close on Friday. We almost made it up here to 11,360. Resistance is going to be right there for right now, 11,332. 11,3, it's just 11,331. And he pushed back into that area. He's going to have to take some phenomenal news. I don't think he's going to have that on President's Day. So resistance on a short-term basis would be this 11,331. Actually, we can probably pull it down just a little bit lower, 11,324, so about 50 pips away. You know, when you think about how slow things are in Germany, eventually we finally saw this come down here and take this dip and come back here. This may be the last hurrah, maybe on the, once again, everybody's all pepped up with these China US talks, and then maybe we'd eventually work a little bit lower, but that will come to, we'll see how that comes to pass. Support on a short term basis is going to be right there, 11,178, right there. There's got some volume coming in right there. And once again, the bias chart, like I said, is essentially when we lay this out, because I mean, obviously the guys on the team, their work is far more longer term. Um, but when we look at the bias chart, it's for today into the next 24 hours. So sometimes you look, I might not have the type of patterns that Gregor or Steve or Stelios, I mean, where they're looking for bigger, longer term moves. So our information is based on this is more for short term trading. Then the analysis that we put before is for the next 24 hours, starting from now on to the next 24 hours, just to give once a little bit clear perspective. So a lot of our support resistance, we're looking at different areas of volume that we see here. And it's not I'm doing volume analysis, but we're seeing the most touches and working within these zones, and then looking at Fibonacci's levels to see if we can get those to confluence. And then certainly we'll look at the exponential moving averages as far as generating further momentum. We referenced that too, just with the euro, and we were giving warning signs over the last, prior to trading days, when we're looking at the euro, and we referenced at the exponential moving average, the disparity of that moving average. We saw it here, where you look how far this got before we saw this euro really come off. We saw the same thing, and that's why I believe we can work higher. Not so much that it may be also bullish, although we may get a pretty good pop on U.S. China trade talks if we get that news out, but certainly just for this market to even itself out certainly bodes to push higher. And certainly when you look here, you caught some people, and then on Friday you would have thought this market really had a chance to really break down. And I think you caught some people that said, I'll wait. Okay, now I'm going to go. And then they got caught with their pants down. I think a lot of them got knocked off on Friday, but there are some that say, you know what, I know it's still going to be a tough road to hoe for the euro. I'm not giving up anytime soon. Now their uncle point may come in around this 1360-ish. So there's a door that's going to be open for them to move higher and for us to even out this disparity in the exponential moving averages. Almost like, as I said, almost like a reversion trade, so to speak. With that being said, I'll go and get the bias chart posted. And thanks for joining us here on the European Crossover webinar.